I've lived long enough to see the same movie over and over again. The winners are rarely the smartest people in the room. They are the ones who stay on their feet when everyone else has given up. It's a dirty little secret that no one likes to admit. Brains help, of course, but persistence beats brilliance in most cases. I've seen geniuses go broke because they couldn't stop tinkering with clever ideas. And I've seen ordinary hard workers build a fortune just because they kept grinding, decade after decade. When I was a young man in 1940, I didn't look like what people imagine a future billionaire to be. I wasn't born rich. My family went through the Great Depression like everyone else, fighting, surviving, wondering if things would ever get better. If persistence had been a stock back then, it would have traded at a massive discount. People gave up quickly. They thought one failure meant life was ganging up on them. But the world doesn't care about your feelings. It doesn't care about your bad luck or how brilliant your theories sound over a drink. The world just keeps moving, and it rewards those who keep moving with it. I've said before that envy is a terrible sin because it's the only one you don't even get any pleasure from. But if I had to pick the second stupidest trait, it would be giving up too early. Most people think success comes from some flash of genius. It doesn't. It comes from boring, unglamorous, stubborn persistence. Let me tell you a story. When Warren Buffett and I teamed up in the 1960s, we didn't have some magic formula that guaranteed billions. We bought stakes in businesses that made sense, avoided debt like the plague, and stayed in the game longer than the people around us. It wasn't exciting. It wasn't sexy. It was just rational. We didn't chase every fad. We didn't let envy push us into foolish deals. We persisted in being boring while everyone else was running around chasing thrills. And that persistence paid off. Compound interest isn't just about money. It's about behavior. If you persist in doing sensible things, the results snowball. If you persist in doing stupid things, the destruction snowballs. I've seen both kinds of persistence. One person slowly builds a fortune by staying employed, saving, and investing in boring index funds. Another person burns through 3 fortunes because they can't resist doubling down on some speculative nonsense. They are both persistent, but only one survives. The point is that survival is more important than brilliance. You can't win if you don't stay in the game. Many smart people forget this. They chase every shiny opportunity, and when they blow up, they don't get another chance. When I was building my career, I didn't have the luxury of chasing fantasies. I went through a divorce that left me broke, lost a child who died young, and faced a pile of personal failures that would have finished off a weaker man. Now here is the thing. I didn't quit. I kept working, kept thinking, kept moving forward. I was too stubborn to give up. And eventually, the tide turned. That is the difference between winners and losers. It's not about who has the highest IQ. It's about who can take the hits and keep going. And if you're looking for a formula, it's very simple. Avoid stupid mistakes, stick to what works, and refuse to quit, even when it feels unbearable. You don't need to be the smartest. You just need to outlast everyone else. The world is full of geniuses who lacked persistence. You've never heard of them because they gave up before they had a chance to be remembered. Winners are the stubborn ones who refuse to leave the table. If you want to guarantee a miserable life, start comparing what you have to what everyone else has. That is envy in a nutshell. And it's the stupidest sin of all. Because, unlike lust or gluttony, You don't even get a hint of pleasure from it. I've seen envy destroy more people than poverty ever has. A man with a decent job, a loving family, and a modest home can live a good life until he notices his neighbor bought a bigger house or a flashier car. Suddenly, he feels poor. Not because he is poor, but because he can't stand the thought of someone else looking richer. It's ridiculous, but that's human nature. We'd rather feel superior than actually be happy. Warren and I never spent much time worrying about how much other people were making. If you spend your days tracking every new billionaire on the Forbes list, you'll go crazy. There will always be someone richer, flashier, or luckier than you. So what? You can't eat prestige, and you can't turn envy into wealth through compound interest. In the 1970s, many investors looked down on us because we weren't jumping on the latest growth stocks. They thought we were boring old men chasing newspapers, insurance, and candy companies. Well, we persisted, and they didn't. Now, half of those hot companies are bankrupt footnotes, and See's Candies is still selling chocolate every Valentine's Day. Here's the irony. Envy usually pushes people towards stupidity. They buy houses they can't afford, cars they don't need, and investments they don't understand, all to look richer than they are. And then they blow themselves up financially. I once knew a lawyer, smart, hardworking, respected, but he couldn't stand that some of his colleagues drove nicer cars. So he started speculating on margin, chasing the next big thing in stocks. For a while, he looked brilliant. Then, one bad downturn hit, and he lost almost everything. His envy got the better of him, and all his education couldn't save him. Contrast that with Warren. Here is a man whose net worth exceeds $90 billion, yet he still lives in the same house in Omaha he bought in 1958. He doesn't care if some hedge fund guy is flying a Gulfstream jet. He knows who wins in the long run, the one who avoids envy, avoids debt, and avoids drama. People ask me, what's the secret to a happy life? I usually give them the same boring answer. Avoid envy, avoid resentment, avoid self-pity. The world won't care if you have these habits. It will just keep punishing you for them. Envy has no upside. It doesn't make you richer. It doesn't make you smarter. It doesn't make you live longer. It only makes you bitter, irrational, and self-destructive. That's why I call it the stupidest sin. If you want to be miserable, go ahead and indulge it. But if you want to survive and thrive, learn to ignore what other people are doing and focus on your own game. The winners in life aren't the ones with the trendiest toys. They are the ones who persist in avoiding stupidity while everyone else is busy trying to keep up with the Joneses. So next time you feel envy creeping in, remind yourself that the other person might look richer today. But in the long run, the tortoise beats the hare, and the tortoise doesn't waste time staring at the hare's new car. People think billionaires don't make mistakes. That's nonsense. I've made plenty. Some so big that I still feel the sting decades later. One of my stupidest mistakes was simple. I held on to a wrong idea for too long. Not because it was rational, but because my ego told me I was right. In the 1960s, I bought a stake in a company. Let's just say it wasn't See's Candies. On paper, it looked fine. I convinced myself it was a bargain, that the numbers were on my side. But deep down, I knew it was a mistake. The business was mediocre. The management couldn't be trusted. The economics didn't make sense. And yet I thought, I'm smart. I can fix this. That thought cost me millions. You see, the market doesn't care how smart you think you are. If you marry a lousy business, you're in for a miserable marriage. And no amount of intelligence will save you from a bad partner. Warren figured this out before I did. He used to chase cigar butt companies, cheap businesses with one last puff left in them. But over time, he realized it was a foolish strategy. Why buy a failing business just because it looks cheap? You end up spending years cleaning up messes when you could have just bought a great business at a fair price. That shift, learning to buy quality over cheapness, changed everything. It took me longer to accept that, and the delay cost me a fortune. The irony is that persistence, which usually helps, can sometimes hurt. If you persist in the wrong direction, you're just digging your own grave deeper. The trick is to combine persistence with rationality. Don't just keep going. Make sure you're going in the right direction. I'll give you an example outside of investing. During the Great Depression, I saw many families clinging to businesses that were clearly dying. They kept borrowing, kept grinding, kept persisting. But persistence in a doomed venture is just stubbornness in disguise. They would have been better off cutting their losses and starting over. It took me years to develop the discipline to walk away faster. Now, when I see a business that doesn't make sense, I don't care how clever the deal looks. I'd rather let someone else play the hero. I learned that the market punishes a stubborn ego. Here's the lesson. You don't need to be a genius, but you do need to avoid obvious stupidity. My mistake wasn't being not smart enough. It was ignoring what was right in front of my face. I persisted in an error because I didn't want to admit I was wrong. That is how you lose millions without even noticing. So if you want to survive in investing or in life, learn to drop your stupidest ideas quickly. Persistence only pays off if you're persisting in something rational. Otherwise, you're just proudly marching off a cliff. It took a multi-million-dollar lesson for me to realize that. I suggest you learn it more cheaply. The biggest problem people have isn't ignorance. It's that we are so certain about things that just aren't true. I've sat in rooms with very smart people who had strong opinions on topics they didn't understand. They spoke with confidence and acted with conviction. And then they lost their shirts. Confidence without competence is dangerous, yet on the stock market, it's everywhere. It's fatal. The moment you think you know exactly what a stock will do, you've already lost. The world is too complex for certainty. At best, you get probabilities. When Warren and I invest, we aren't looking for guarantees. We look for situations where the odds are heavily stacked in our favor. That's all you can ask for. And even then, we assume we'll be wrong sometimes. Most people can't stand that thought. They crave certainty. They want predictions, bold statements, and confident forecasts. That's why TV is full of experts shouting at each other about where the market is going next. It's entertainment, not wisdom. I once met a man who made a fortune in real estate in the 1970s. He thought he was a genius. When the oil crisis hit and interest rates went wild, his whole empire collapsed. He didn't realize his success was partly luck, and he confused luck with skill. Overconfidence ruined him. The problem is made worse by another human flaw. We hate changing our minds. Once we've taken a position, whether in politics, business, or investing, we cling to it. Admitting we were wrong feels like admitting we are stupid. So we double down, even when the facts change. That is how smart people go broke. Not because they lack IQ, but because they can't separate their ego from their decisions. I try to cultivate the opposite habit. When the facts change, I change my mind. When I realize I'm ignorant, I shut up and listen. It's not complicated, but it is rare. Warren and I built our partnership on the ability to challenge each other's ideas. If I say something stupid, he tells me. If he says something stupid, I tell him. We don't care about bruised egos. We care about being right in the long run. That kind of brutal honesty is uncomfortable for most people, but it's necessary if you want to avoid catastrophe. The world is full of people who were too sure of themselves. The banker who thought subprime mortgages were safe in the 2000s. The tech investor who thought every .com in the late 90s would change the world. The gambler who thought he had a system to beat the house. They all had confidence. What they lacked was judgment. Here is the truth. If you aren't prepared to say, "I don't know," you're going to learn the hard way. And the tuition fees in the markets are very high. Winners aren't the loudest or the most confident. They are the ones who quietly admit their ignorance, keep learning, and avoid betting everything on their own opinions. I'd take a cautious plotter over a cocky genius any day, because the plotter will still be in the game when the genius blows up. Most people spend their lives playing the wrong game. They are obsessed with careers, titles, promotions, and status symbols, but they never think like owners. A career is climbing a ladder someone else built. Ownership is building the ladder yourself. These are two very different ways of living. I've met many high-status professionals who looked successful on the outside. They had corner offices, fancy suits, and impressive resumes. But if you dug deeper, they were just high-paid servants. The moment their company hit a downturn, they became expendable. Meanwhile, real wealth flowed to the people who owned the place. Lawyers, consultants, and executives were busy trading hours for money. Owners were making money while they slept. When I was a young lawyer in Los Angeles, I figured this out early. Law can be an honorable profession, but it's a treadmill. You're selling your time, one billable hour at a time. And time is the scarcest resource in life. You don't get it back. So I asked myself, do I really want to spend the next 40 years billing by the hour? The answer was no. That's when I started shifting toward investing and ownership. Warren understood this instinctively. While his classmates in business school dreamed of executive positions, he dreamed of buying companies, owning productive assets, and letting other people do the work while he reaped the rewards. That's not greed. It's common sense. If you don't learn to think like an owner, you will always work for someone who does. Of course, ownership requires a different mindset. An employee thinks about this quarter's performance review. An owner thinks about the next 20 years. An employee worries about looking busy. An owner worries about building value. The problem with careerism is that it fuels envy. People climb the ladder just to show they are above the person below them. They care more about status than substance. That's how you get entire industries full of smart people doing stupid things just to impress each other. Ownership, on the other hand, forces rationality. If you're risking your own money, you stop caring about office politics. You stop caring about appearances. You care about results, and you think in decades, not quarters. This doesn't mean everyone should quit their jobs tomorrow, but it means you should shift your mindset. even if you work for someone else, think like an owner. Ask yourself, is this project creating long-term value, or am I just climbing a meaningless rung? Save and invest your money in assets that work for you, not just toys to impress your neighbors. I've seen both sides. The careerist who spent 30 years chasing promotions and ended up bitter with nothing but a gold watch, and the quiet plotter who saved, invested, and became financially free while no one was watching. Guess which one slept better at night? In the end, persistence matters, but only if you persist in the right game. Persistence in careerism is like running faster on a treadmill. You end up in the same place, just more tired. Persistence in ownership builds something that lasts beyond your working hours and even beyond your life. So, make your choice. I was born in 1924, which means my earliest memories were shaped by the Great Depression. You don't forget something like that. It leaves a mark on how you see risk, money, and survival. Back then, people weren't worrying about stock options or the next Silicon Valley unicorn. They were worrying about how to put food on the table. I saw neighbors lose their homes. I saw proud men standing humiliated in bread lines. I saw families forced to move in together just to pay the rent. When you grow up in that environment, you don't get blinded by easy promises. You learn that bad things really can happen, and you learn to respect risk. Many people today think downturns are temporary inconveniences. They grew up in a world where the government bails out the system, or where recessions only last a year or two. They don't understand how long the pain can last. The Great Depression dragged on for a decade, and for some families, it never truly ended. One of the most important lessons I took from that era is simple: avoid debt. Debt is seductive when times are good, and fatal when times are bad. In the 1930s, countless families lost everything because they had borrowed too much while things seemed secure. Then the storm came, and they were simply washed away. Warren and I built Berkshire Hathaway with that lesson in mind. We hate unnecessary debt and would rather miss an opportunity than risk a total wipeout. That's why we've always kept plenty of cash on hand. We want to be the buyers when everyone else is desperate to sell. Another lesson is about persistence. The families who survived the Depression weren't always the smartest or most talented. They were the ones who could adapt, endure, and keep going in the face of humiliation and loss. They didn't quit. They took any job they could find, lived below their means, and clawed their way back. I saw my own family live exactly like that. We didn't wallow in self-pity. We accepted the reality of hardship and kept moving. That attitude stayed with me for life. The Depression also taught me to distrust glamour. When times are good, flashy industries attract capital like moths to a flame. When bad times hit, those same industries are the first to collapse. Boring businesses, like selling newspapers or candy, survive. That's why Warren and I always preferred boring machines that steadily generate cash flow. They might not make headlines, but they'll feed you during the storm. People often ask why I'm so blunt, sometimes even pessimistic. Well, if you grew up watching people lose everything overnight, you wouldn't have much faith in rosy forecasts either. I'm not a pessimist, I'm a realist. And realism is just optimism with a seatbelt fastened. The Great Depression made me who I am. It taught me that survival is more important than brilliance, that debt is poison, that persistence is everything, and that boring businesses are often the best businesses. You can ignore these lessons if you want, but history has a nasty habit of repeating itself. If you want a shortcut to a decent life, here it is. Stay away from debt, stay away from drama, and stay away from stupid people. First, debt. I've said it 1,000 times, but it's worth repeating. Debt is like heroin for people who think they're smart. It feels good at first. Instant gratification, leverage, bigger bets. No, when the tide goes out, debt is unforgiving. It ruins you. I've watched perfectly sensible people drown themselves with leverage. They couldn't resist the temptation to juice their returns, wanting to look smarter than they were. And when the downturn came, they had no margin of safety. They lost their businesses, their homes, and sometimes their families. Warren and I always avoided this poison. At Berkshire, we keep cash and sleep soundly at night. We are happy to look boring because boredom keeps you alive when everyone else is panicking. Next, drama. I have no patience for it. Life is too short to get caught up in endless arguments, scandals, and petty grievances. If someone thrives on drama, I let them do it without me. You won't find me in shouting matches or long-running feuds. It's a waste of time, and time is the one thing compound interest doesn't work on. People who chase drama rarely build anything. They spend all their energy on the noise instead of the substance. I prefer peace, quiet, and rational discussion. It might not sound exciting, but it's much more productive. And finally, stupid people. This is a tricky one because stupidity doesn't always look like stupidity at first. Sometimes it looks charismatic, confident, or ambitious. But if you watch long enough, stupidity reveals itself through reckless behavior, envy, dishonesty, and arrogance. I avoid such people like a contagious disease because stupidity is contagious. Spend enough time around fools, and you'll start making foolish decisions yourself. I'd rather have a small circle of reliable, rational people than a huge crowd of noisy idiots. That's why I've always valued my partnership with Warren. He is rational, disciplined, and drama-free. We've had plenty of disagreements, but never destructive ones. That's a rarity. Avoiding debt, drama, and stupid people doesn't guarantee success, but it drastically lowers your chances of catastrophe. And in life, avoiding catastrophe is half the battle. I never needed to be the smartest person. I just needed to avoid the traps that take most people out of the game. That is why, even at my age, I can look back and say, I survived. And survival, multiplied by a lifetime, looks a lot like success. So ask yourself, are you taking on debt to look richer than you are? Are you wasting time on petty conflicts? Are you surrounding yourself with people who pull you down? If the answer is yes, you don't need a miracle. You just need to stop. Cut the debt, cut the drama, cut the fools. It's not glamorous advice, but it works. Winners in life are usually the ones who keep working while everyone else is busy blowing themselves up. If you think Warren Buffett and I built Berkshire Hathaway by agreeing on everything, you're wrong. We argued a lot, but the difference was that we argued rationally. In our partnership, something very simple worked. We both valued truth over ego. If I thought Warren was wrong, I told him. If he thought I was wrong, he told me. And neither of us wasted time being offended. It sounds obvious, but in practice, it's rare. Most people would rather protect their pride than face the truth. We weren't like that. We cared about the right decision, not about being right ourselves. Another thing that worked was that we shared the same values. We both hated debt. Both loved boring businesses with steady cash flows, and both avoided envy and showmanship. This gave us a foundation of trust. I never worried that Warren would run after some fad, and he never worried that I would blow us up with leverage. We also had complementary strengths. Warren is a learning machine. He reads non-stop. He can process vast amounts of information and spot patterns others miss. I am more skeptical, more blunt, and more focused on avoiding stupidity. Together, we balanced each other out. He pulled me toward opportunities. I pulled him away from traps. Of course, it wasn't perfect. We had our share of mistakes. Buying Berkshire Hathaway itself was a stupid move. It was a lousy textile business, and it cost us years of wasted effort. But once we recognized the mistake, we pivoted and used the company as a vehicle to buy better businesses. That persistence, combined with adaptability, is one of the few formulas that actually work. We also missed opportunities. We were too cautious with technology in the early years and avoided the sector entirely for a long time because we didn't understand it. That discipline saved us from the dot-com crash in the late 90s, but it also made us slow to recognize when companies like Apple turned into consumer goods businesses with predictable economics. Eventually, Warren figured it out, and Apple became one of our best investments, but it took longer than it should have. So, no, our partnership wasn't flawless, but it worked for over 60 years because we shared one vital habit: persistence in rationality. We didn't chase every trend. We didn't let emotions or envy dictate our steps. And we didn't quit when things got boring. We just kept doing the same sensible things, year after year, decade after decade. That kind of discipline has a way of compounding. It doesn't make headlines, and it doesn't impress people at cocktail parties, but it builds something durable. People like to romanticize partnerships as if it's all about perfect chemistry or magic intuition. It isn't. It's about shared values, hard honesty, and persistence. You can tolerate disagreements if you know the other person is rational and playing the long game with you. That is what worked with Warren. We weren't trying to outshine each other. We were trying to outlast everyone else. And we did. Most people think wealth is a result of genius, but it isn't. It's a result of avoiding stupidity and persisting long enough for compound interest to work its magic. The truth is that almost anyone can become wealthy enough if they follow a few boring rules. Spend less than you earn, avoid debt, invest in what you truly understand, and don't interrupt the compounding process with stupid behavior. That's it. No magic, no secret formulas. Just dull, repetitive discipline. What's amazing is how few people can actually do it. They get bored, they get envious, they want shortcuts, and that is where they trip up. I've known countless professionals who had high incomes but ended up with nothing. Why? Because they couldn't resist living beyond their means. They financed status symbols instead of assets, caring more about looking rich than being rich. Meanwhile, I watched ordinary people, teachers, shopkeepers, even janitors, quietly build seven-figure fortunes by diligently saving and investing in boring index funds. They persisted while the so-called geniuses kept blowing themselves up. One of the most dangerous illusions is that intelligence guarantees wealth. I can assure you, it doesn't. The world is full of brilliant professors who understand complex theories, but can't balance a checkbook. And it's full of ordinary people who retire rich simply because they avoided debt. and let compound interest do the work. The market doesn't pay you for being smart. It pays you for being patient and for surviving. It pays you for not interrupting the snowball as it rolls down the hill, gaining mass year after year. People hate hearing this because it sounds too simple. They want excitement and a belief in some clever trick. But the world is designed to reward persistence, not flashiness. I didn't plan to be a billionaire. I just avoided the things that lead most people to failure. I stayed in the game long enough and let compound interest do the heavy lifting. The irony is that wealth feels almost accidental when you live this way. You wake up one day after decades of rational persistence, and the snowball has turned into an avalanche. Not because you were a genius, but because you weren't stupid. Here is the punchline. Becoming rich is less about brilliance and more about avoiding envy, debt, drama, and overconfidence. Stay rational, stay patient, stay persistent. The rest will take care of itself. And if that sounds boring, great. Boring is what works. If you take nothing else from my life, remember this. You don't need to be a genius to win. You just need to avoid being stupid, and then keep going longer than everyone else. I've seen entire generations of bright young people burn out because they couldn't stay disciplined. They had all the intellect in the world, but no persistence. They were sprinters in a marathon, and the market eats sprinters alive. Survival is underrated. People praise boldness and genius, but the ones who remain, the ones who end up rich, respected, and perhaps even happy, are the stubborn plodders who keep showing up year after year. Warren and I didn't build Berkshire Hathaway by being dazzling. We built it by being boring, buying good businesses, avoiding debt, ignoring envy, and letting compound interest work. That is persistence in action. And here's the paradox. While it's happening, persistence doesn't look like winning. It looks slow, cautious, and sometimes even foolish to outsiders. No, over a lifetime, persistence laps brilliance almost every time. I've lived nearly a century, and I can tell you the world punishes impulsiveness, arrogance, and envy. It rewards patience, discipline, and rational stubbornness. I didn't plan on becoming a billionaire. I just missed the mark by persisting in a few sensible habits. Avoid stupid mistakes. Save. Invest in what you understand. Eliminate debt, drama, and fools. And never give up when it matters. So here is the question you should ask yourself. Are you trying to look smart, or are you trying to outlast? Because the winners are not the cleverest ones. They are the ones still standing when everyone else has given up. And if that sounds too simple to you, well, perhaps simplicity is exactly what you've been missing all along.